loan types. There's various different types, and let's talk about those. And so you have somewhat of an understanding. The most common type when you hear the term agency, or Fannie Mae and Freddie Mac, those are the government-sponsored agencies that basically insure almost all conforming loans out there. Those are the basic type of loans you hear of on a daily basis, but there are other types of loans. FHA is just a different government agency. It's HUD. The appeal of the FHA loan traditionally has been a low down payment. The minimum down payment for an FHA loan is 3.5%. In addition, the FHA has looser guidelines, lesser credit restrictions. You can qualify with a potentially lower credit score and higher debt to income ratios. So these were really, really popular with first-time home buyers or people struggling but really wanted to get into a property. VA loans, Veterans Administration. These are really, really popular, and I think it's a really, really good thing for the veterans. Depending on your status as a veteran, you can qualify with no money down on these VA loans, and the rates are really, really good. Very, very favorable, and I think it's something important. If I ever would agree on the government getting involved in anything, is helping our veterans, and I'm all for those type of loans. And there's rural loans, USDA loans. These are for loans more out in the country with a lot of acreage. Very basic, but the loans you hear on a daily basis are the standard 30, 15-year fixed. Those are the Fannie Mae, Freddie Mac type of loans. And within those guidelines, there are various down payments. The minimum down payment on an agency loan is 5%. However, if you're a first-time home buyer, you can put as little as 3% down. So here we have where the agencies, Fannie Mae and Freddie Mac, are actually competing now with FHA for the first-time home buyer program with a lower down payment and more favorable terms. What are the different loan types and where do these loans go to? Let's talk about those. We'll start with the basic ones that most people you're familiar with. When you hear about the 30-year fixed or the fixed rate mortgage or adjustable rates, for average loan sizes, roughly $500,000 or those average type of loan sizes, those are the standard Fannie Mae, Freddie Mac insured loans. Fannie Mae and Freddie Mac are the government-sponsored entities that insure these loans. They set the guidelines for those type of loans. Those are the most common, the one you hear about all the time. When you see mortgage rates advertised, that's what they're advertising, the agency type loans. I would venture to say they're over 90% of the mortgage volume in this country. But there are other options. As I mentioned, those are government agencies. You have HUD. HUD is another government agency. Their loans are FHA loans, Federal Housing Authority. What's their appeal? Traditionally, FHA loans you can do as little as 3.5% down. And their guidelines are looser, meaning you can have a lower credit score. So if you have some challenges with your credit history, an FHA loan may be for you. Or if you have higher debt to income ratios, an FHA loan might be for you. So that's a benefit of an FHA loan. Keep in mind though, if you're going to go that route and you're looking to buy a condo, the whole condo association needs to be FHA approved. So there's a challenge sometimes in doing those in a condominium building. VA loans. VA loans, I'm a big fan of these. These are for veterans, the Veterans Administration. If I would ever agree that the government should get involved in anything, and I wouldn't basically find that at any time, but this is where we should help our veterans, those who've sacrificed their life to serve. And with a VA loan, the rates are incredibly competitive, and you can put, if you qualify, no money down. It's a great, great program. Always ask if you think you may qualify to go a VA route. I had this happen a few years ago. The borrower was doing a loan really when the rates were really, really low, and she indicated to me that her husband was a veteran. And I said, hold on, let's restructure this whole process. Let's put less money down. Let's get you a better rate. It was it's something you always want to consider. And for those rural areas, and there's the USDA. Those are for a lot of acreage farms type of loans. So these are all government-sponsored entities. These are all loans that they try to insure to cover the whole population. If you do and you break that down in different ways to approach. Let's go back those I mentioned, Fannie Mae, Freddie Mac, two agencies that basically do the same thing that insure most of the loans. They do their minimum down payment is standard is 5% for one of their type of loans. However, they have gotten into the first-time home buyer market, and they'll do as little as 3%. And this does compete directly with FHA, and it's actually a much better avenue to go to, better rates and lower monthly mortgage insurance. Jumbo loans, let's not forget these. These are the loans that are over basically $726,000. These are loans that banks lend on their own money that are not sold on the secondary market. Traditionally, they follow the same guidelines, but they're particular to each individual investor out there that are sold. So these are loans, they're just larger loans. That's all they are. The rates may be the same or actually in the past few years lower than conforming loans, conventional loans. So nothing to be afraid of if you're buying that higher end property. You may actually get more favorable terms, especially in the past few years. That's a quick breakdown of the different types of loans out there. Always reach out for any questions.